Hello everyone, my name is Anubhav Singh. Today we are starting the lecture number 22, that is all about duty exemption and duty remission scheme. So after this lecture, you will be able to understand what is the objective of duty exemption scheme, advanced authorization scheme, export, what are the export obligations we have, duty-free import authorization, schemes for export of gems and jewelry, and EPCC. So duty exemption scheme, what is all about the duty exemption scheme? Duty exemption scheme enables duty-free import of inputs required for export production. An advanced license is issued as a duty exemption scheme. A duty remittance scheme enable post-export replacement remissions of duty on input used in the export production. As we know, in terms of India, whenever we are doing any export and import business, so we have numerous number of the credit guarantee schemes and duty exemption schemes, where whenever we are importing any product or services from across the globe, we might get certain exemptions on import. So duty exemption scheme enable duty free. We don't need to pay any duty and taxes while importing any goods or importing any inputs. If suppose that whenever we are importing any product and services, importing any product or that is called input we are importing for export production, then we don't need to make the payment of duties. So that is called duty exemption scheme enables duty free import of inputs required for export production. An advanced license is issued as a duty exemption scheme. A duty remission scheme enables post-export replacement remissions of duty on input used in the export production. Okay. Duty remission scheme consists of DFIA, duty-free import authorization scheme. DEPB, duty entitlement passbook scheme. Duty entitlement passbook scheme. So we have duty remission scheme consists of duty-free entitlement authorization scheme, duty entitlement passbook scheme. DFIA permit duty-free replacement of input used in the export product. DFIA permits duty-free replacement of input used in the export products. If we will talking about a DEPB, DEPB allows drawback of import charges on input used in the export products. So DEPB, duty entitlement passbook scheme, is basically for whenever we are importing any raw materials for the export production, then we might not need to make the payment of import charges. So and DFIA permit duty-free replacement of input used in the export production. Clear? So this is all about the two commonly schemes which is known by the DFIA, that is called duty-free import authorization scheme, and DEPB, duty entitlement passbook scheme. Next is advanced authorization. What is all about the advanced authorization? Advanced authorization means duty-free import of input allowed for the export. Whatever the inputs we are importing from across the globe, and basically with those inputs is for the export of the goods and services, then we need not to make the payment of duties. Minimum 15% value addition to be achieved. Okay, whatever the products we are importing from across the globe for production, then we are required minimum 50% of the value addition should be required to achieve. Export import to be completed within the 24 months. Suppose that you are importing any goods and services on 26th of June, suppose that, then what actually you have to do within the 24 months, you have to be within the 24 months you have to be produce the certain goods and services, and you have to be go for the exporting of those items. Bonds, bank guarantees, LUTs to be given to the custom authorities. Okay, bonds, BGs, LUTs to be given to the custom authorities. Clear? Clear enough? So bonds, as we know, whatever the bonds and the ventures we are bank guarantee and LUT, letter of undertaking is commonly known as LUT, letter of undertaking. So letter of undertaking is commonly known as a LUT. The letter of understanding is prescribed to be furnished in the form GST RFID 11 under the rule 96A, whereby the exporter declare that he or she would fulfill all the requirements prescribed under the GST while exporting without making IGST payment. Further, advanced license indicate description of export item. Advanced license indicate description of export items, quantity of export item, FOB's value of export, free on board, description of import items, quantities of import items, and CIF values of import. Okay. So advanced license indicate description of export items, whatever the products and services we are exporting, we have to be describe the each and every element, quantity of export items, how many quantities you have, FOB's values of export, description of the import item, quantity of import items, and CIF values of import. CIF stand for cost, insurance, and freight. Import of input exempted from basic custom duties, additional custom duties, and safeguard, and suppose that anti-dumping duties. So whatever the inputs we are importing, those inputs will be exempted from basic custom duties. We don't need to make the payment of basic custom duties. Additional custom duty, we don't need to make the payment, and safeguard, that is called anti-dumping duties, also we don't need to make the payment. That is called advanced authorization. Annual advance authorization available only to the status holder and exporters within the 2 years of export. Entitled when evaluation 300% of the FOB's values or rupees 1 crore, whichever more in a preceding year. Authorization values for 24 month import or export. Within the 24 months, you have to do the import and export. Then only you'll be able to get the exemptions of duties and advanced duties and custom duties. License only mentions the export products group, CIF values, cost, insurance, and freight, and FOB's values. License only mentions the export product group, CIF values, and FOB's values. License holder can export any product falling under the product group, including item which norms don't exist. The license holder can export any product and services falling under the product group, including the items for which norms don't exist. Only one license for one product group or port of the registration. Only one license for one product or product group or product port of registration. Now, what are the export obligations we have? Export obligations. What are the export obligations are provided? We have to be provide periods for fulfillment of export obligation under the advance authorization shall be 18 months from the date of issue of authorization. Periods for fulfillment of export obligation under the advance authorization shall be 18 months from the date of issue of authorization. Period of EO fulfillment under an advance authorization shall commence from date of issue of authorization unless otherwise specified. In case of supplies to project in India under Chapter 7 of FTB's foreign trade policies. FTB stand for, please note down these abbreviations. In case of supplies to the project in India under Chapter 7 of FTBs or project abroad, the export obligation period shall be coterminous with the contracted duration of the project execution or 18 months, whichever is more. Okay, so in case of supplies to the project in India under Chapter 7 of FTPs or project or abroad, the export obligation period shall be coterminous with the contracted duration of the project execution or 18 months, whichever is more. Export obligations for items falling in categories of defense. Export obligations for items falling in categories of defense, military store, aerospace, and nuclear energy shall be 24 months from the date of issue of authorization or coterminous with the contracted duration of the export order, whichever is more. So export obligations for items falling in category for defense, military store, aerospace, and nuclear energy shall be 24 months from the date of the issue of authorization or coterminous with the contracted duration of the export order, whichever is more. Next, duty-free import authorization. Duty-free replacement certificate. Duty-free replacement certificate is issued to the merchant exporter or manufacturer exporter for the import of units used in the manufacture of goods without payment of basic custom duty and special additional duty. However, such inputs shall be subject to the payment of additional custom duty equal to the excise duty at the time of import. So what is all about? Duty-free replacement certificate is issued to a merchant exporter or manufacturer exporter for the import of input used in the manufacture of goods without payment of basic custom duty and special additional duty. However, such input shall be subject to the payment of additional custom duty equal to the excise duty at the time of import. Clear? So that is called duty-free replacement cycle. It is issued to a merchant exporter. It's issued to the merchant exporter or manufacturer exporter for the import of input used in the manufacture of goods without payment of basic custom duty and special additional duty. However, such input shall be subject to the payment of additional custom duty equal to the excise duty at the time of import. Simple about. It's very quite simple. New scheme effective from 1st May 2006. Duty-free import authorization. Duty-free import authorization or DFIA in short is issued to allow duty-free import of input which are used in the manufacture of the export product, making normal allowance for wastage and fuel, energy, catalyst, etc., which are consumed or utilized in the course of their use to obtain the export products. Okay. So duty-free import authorization or DFIA in short is issued to allow duty-free import of input which are used in the manufacture of the export products, making normal allowances for wastage and fuel, energy, catalyst, which are consumed or utilized in the course of their use to obtain the export products. Next, exporter allowed to import inputs free of basic custom and additional duty. Exporter allowed to import inputs free of basic customs and additional SAT duty. And DFIA indicate the names and quantity of raw material to be allowed duty free. So whatever the raw material we are importing from across the globe, just because of the production which is going to be meant for the export, so we have to be indicate the, as per the DFIA, we have to be indicate the name and quantity of the raw material to be allowed duty free. Because if suppose that you are importing the goods and services, if you are importing the raw material basically for domestic businesses, then it is not meant to be allowed for duty free. It is only for whenever you are doing production basically for the what we call export purpose, then even only there will be allowed to the duty free. Duty-free import authorization. Further, DFIA, duty-free import authorization, are material imported under it transferable after completing EO. Minimum value addition of 20% is required. Minimum 20% is required. Schemes covers only product for which standard input-output norms exist. Additional custom duties refunded through CENBET, Central Value Added Tax. CENBET stands for, that is called MODVAT, also Modified Value Added Tax, Central Value Added Tax. The additional custom duty is refunded through CENBET or drawback in case of transferability from one place to other place. CENBET is permitted under the scheme. Now all these things have been what we call abolished due to the GST came into the existence. What are the eligibility when you can get the duty-free import authorization? Duty-free import authorization, or in a short we call DFIA, shall be issued on post-export basis, for product which standard output norms SIO1 have been notified. The duty-free import authorization shall be issued on post-export basis for product for which standard input-output norms have been notified. Second, merchant exporter shall be required. Merchant exporter shall be required to maintain name and address of supporting manufacturer of the export product on the export duties, that is shipping bill, airway bill, bill of export, ARE form, AREC. The merchant exporter shall be required to mention name and address of supporting manufacturer of the export product on the export document, that is called in a shipping bill, airway bill, bill of export, ARE form 1, ARE form 3. The ARE stands for application of removal excise. Application is to be filed with the concerned regional authority before effecting export under duty-free import authorization. So application is to be filed with the concerned regional authority before effecting export under duty-free import authorization. Next is validity and transferability of DFIA. Applicant shall file online application to regional authority concerned before starting export under DFIA. Whenever you just want to do certain export under the duty-free DFIA, then what actually we have to do? You have to file the online application to the regional authority concerned before starting export under the duty-free import authorization. Okay, so DFI stands for duty-free import authorization. Export shall be completed within 12 months from the date of online filing of application and generation of the file number. Export shall be completed within the 12 months from the date of online filing of the application and generation of the file number. Once your file number will be generated, then what actually you have to do? You have to complete your export within the 12 months. Later on, you cannot do. So within the 12 months, at any cost, you have to complete your export procedures once your file number will be generated. Separate duty-free import authorization. Separate duty-free import authorization shall be issued for each SION and each port. For each SION, each port, you have to make it out the separate DFIA, duty-free import authorization. Export under DFIA shall be made from a single port. You cannot use the more than one port. So what actually you have to do? Export under DFIA shall be made from a single port. Next is duty entitlement passbook, DEPB. Duty entitlement passbook. Meaning of DEPS. It is an export incentive scheme of Indian government provided to exporters in India. It is an export incentive schemes of Indian government provided to exporters in India. So this scheme is basically for providing the exporters, all those persons who are dealing with export businesses. So this scheme is beneficial for only those. So it is an export incentive scheme of Indian government. It's totally central government scheme. Central government scheme provided to exporters in India. It is issued after export at a predetermined credit to the FOB's value, free on board values. It is issued after the export at a predetermined credit on the FOB's values. It came into the existence on 1st April 1997. It has both pre-export and post-export DPB. The latter is abolished on 1st April 2000. During the Atal Bihari Vajpayee Sarkar, it has been abolished also. So it is an export incentive scheme of Indian government provided to every exporter in India. It is issued after the export at a predetermined credit on FOB's values. It came into existence on 1st April 1997. Then it had both pre-export and post-export DEPB. The latter is totally abolished on 1st April 2000, year 2000. Now, what is all about the duty entitlement passbook scheme? What is the all about the scheme overview? This scheme is basically for comprises in a two-part, namely the post-export and pre-export of DPP. However, the pre-exported was eliminated from 1st April 2000. Now it's only basically working for post-export purpose. Pre-export purpose, that is, it has eliminated from 1st April year 2000. So DPB scheme comprises in a two. It used to be comprised in the two part, namely the post-export and pre-export. But now, from the 1st April 2000, it has been abolished or it has been eliminated. Post-export is issued after the export. That means there's quite simple to understand. Post-export is all about once the export will be done. Post-export is issued after the export, where the exporter is given a duty entitlement passbook scheme at a predetermined credit on the FOB's value. Once export will be done, then only you can do an exporter can be given a duty entitlement passbook scheme at a predetermined credit on the FOB's value. The DEPB rates permit the import of any items except the items that are prohibited from importing, like gold nips, gold pan, gold watches, etc. So DEPB duty entitlement passbook schemes permit the import of any items. You can import any items except the items that are prohibited from importing. That is like gold nips, gold pan, gold watches, etc., which is luxury in the nature, which is prohibited for importing. Further, DEPB rate it will talk about. DEPB rate is applicable based on the FOB's values or the value cap, whichever is the lay. If an item value is more the value rupees 700 and the cap value is 500, the DEPB rate shall be applied. It's an example. The DEPB rate shall be applied on the 500. So DEPB rates are applicable based on the FOB's values or at the values cap, capacity, whichever is the least. Whichever will be least, we have to be pay that will be the DEPB cost or DEPB rate. If an items of FOB's values is 700 rupees, suppose that cap value is 500 rupees, the DEPB shall rate be applied on 500 rupees. Benefit of DEPB rate. The benefit of DEPB schemes shall be applicable on the exported product that are having exogenous materials up to the 5% by weight. The benefit of DEPB scheme shall be applicable on the exported product that are having extraneous material up to 5% by weight. The benefit of again, I'm just telling you, the benefit of DEPB scheme shall be available on the export product that are having extraneous material up to the 5% by the weight. Now, duty entitlement passbook scheme review of DEPB rate. The government of India reviews the DEPB rate after receiving the appropriate export-import data on the FOB's value of export and the CIF value of input, cost, insurance, and freight. Again, I'm just telling you, CIF stands for cost, insurance, and freight. So government of India reviews the DEPB rates after receiving the appropriate export, import data on the FOB's value of export and the CIF values of input that are used in the export product as per the SIOM. This data and information have to be obtained from the concerned export promotion column. So this data and export information, whatever the data and whatever the information have to be obtained, we have to be obtained from the concerned export promotion council. Whether it's a textile, then we have to be go for the textile export promotion council. It's a cashews or gems and jewelry. So we have to be approached to the concerned export promotion council, where we can get it the data and information related with the product and services. Clear? Duty entitlement pass-through scheme implementation of the DEPB rate. DEPB rate are rationalized on the account for change in the custom duty. DEPB rates are rationalized to the account for change in the custom duties. It might change, it might increase, it might decrease also. Totally rationalized onto the account for change in the custom duty. The caps are fixed on certain items, but there would be no verification of the present market value (PMV) on these items. The capacities are fixed on certain items. On certain items, the capacities are fixed, but there would be no verification of the present market value on these items. A number of port have been added in order to avail the facilities under the duty exemption scheme, including the DEPB. So a number of ports have been added in order to availing the facilities under the duty exemption scheme, including the DEPB. The threshold limit of 200 million to fix new DEPB rate have been removed. It have been removed now. The threshold limit of 200 million rupees, 200 millions for fixed to new DEPB rates have been removed as of now. Now further duty entitlement pass-through scheme, provisional DEPB rate. The purpose of provisional DEPB rate is to encourage the diversification and to promote the export of new products. However, the provisional DEPB rates are valid only for a limited period of time when the exporter has to furnish data on export and import for regular fixation of rate. Yes, so if we'll talk about the what are the provisional DEPB rate. So that is all about the purpose of provisional DEPB rate to encourage the diversification and to promote the export of new product. However, the provisional DEPB rates are valid only for a limited period of time when the exporter has to furnish data on export and import for regular fixation of rates. Got it? Provisional DEPB rate. This is all about the purpose of provisional DEPB rate is to encourage the diversification. Business want to be encouraging the diversification. Users, if you are dealing with the textile, users switch over the consumer durables or automobiles or some other field. The main purpose of provisional DEPB rate to encourage the diversification and to promote the export of new products. However, the provisional DEPB rate is valid only for a limited period of time when the exporters has to furnish the data on export and import for regular fixation of the rate of DEPB. Further, the credit under the DEPB and present market value for products that have a rate of credit entitlement under the DEPB schemes comes to the 10% or more. The amount of credit against each support export product doesn't exceed the 50% of the present market values of the export product. At the time of the export, the exporter declares a shipping bill that benefit under the DEPB scheme that doesn't exceed the 50% of the PMB of the export product. Nevertheless, the PMB declaration will not be applicable to products that have been valued capped respective of DEPB rate of the products. The credit under the DEPB and present market level for products that have a rate of credit entitlement under the DEPB schemes come to the 10% or more. The amount of credit against each such product doesn't exceed the 50% of the market, 50% of the present market value of the export product. At the time of the export, what actually we have to do, the exporter declares a shipping bill that benefit under the DEPB scheme that doesn't exceed 50% of the PMB of the export product. Nevertheless, the PMB declaration will not be applicable to products that have value irrespective of DEPB rate of the product. Then utilization of DEPB credit. The credit given under the DEPB schemes is utilized for payment of Indian customs duty, including the capital goods that are free to import. The credit given under the DEPB duty entitlement pass-through schemes is utilized for the payment of Indian customs duty, including the capital goods that are free to import. Further, we will be talking about re-export of goods imported under the DEPB scheme. If suppose that business want to re-export of goods imported under the DEPB scheme, then what actually we have to do? As per the EXIM guidelines, EXIM is all about export import. Export import of India. Export import of India. As per the EXIM guidelines by the Department of Revenue, exported goods that are returned and are found to be defective or unfit, the EU shall again be exported. In case like this, 98% of the credit amount that is debited against DEPB for the exported of goods. This is generated by the concerned Commissioner of Customs in the form of certificate that contain the amount generated and the details of original DEPB. A new DEPB is issued by the concerned DGFT, that is Director of Foreign Trade Regional Authority. The issued DEPB has to have the same port of registration and should be valid for a So issued DEPB has to have the same port of registration and should be valid for a period that is equivalent to the balance period that is available on the date of import of the defective or unfit goods. Now, what are the schemes for exports? We have the numerous number of goods and services. We have taken only one good, that is called gems and jewelries. So scheme for exporters of gems and jewelries. Scheme: advanced procurement, replacement of precious metals for nominated agencies, replacement authorization for gems, replacement authorization for consumables, advanced authorization for precious metals. So advanced procurement, replacement of precious metals from nominated agencies, replacement authorizations for gems, replacement authorization for consumables, and advanced authorization for precious metals. So what are the advanced procurement, replacement of precious metals from nominated agencies? Exporter of gold, silver, platinum jewelry and article thereof, including mounting and finding, and may obtain gold, silver, platinum as an input for export products from nominated agency in advance, replacement after in export in accordance with the procedure specified in this behalf. Now, replacement authorization for gems. Exporters, what the exporters can do, exporters may obtain the replacement. Exporters may obtain the replacement authorization for gems for regional authority in accordance with the procedures specified in handbooks of procedures. Replacement authorizations for gems may be issued against export, including that made against supply for nominated agencies and against supply for foreign buyers. So replacement authorization for gems may be issued against export, including that made against supply for nominated agency and against supply for foreign buyers. In case of plain or stud, gold, silver, platinum jewelry and articles, value of such authorizations shall be determined with reference to realization in excess of prescribed minimum value addition. Simple. You just not recall all these things, just gone through all these things. You should have basic idea. Nobody is going to ask, but being an export import student, we should have basic idea about what are the replacement cycle, what are the schemes are going on, the different products and services. The nominated agencies are MMTC Limited, Handicraft and Handlooms Export Corporation, State Trading Corporation, the Project and Equipment Corporation of India Limited, and any agencies of 5-star export house authorized by the Reserve Bank of India. Simple. Replacement authorization for consumables. Replacement authorization for duty-free import of consumables, tools and other items, namely tags and labels, security sensor or card, staple buyer, poly bag for jewelry made out of precious metals other than gold and platinum, equal to 2%, and for cut and polished diamond and jewelry made out of gold and platinum equal to 1% of FOB's value of export of the preceding year. May be issued on production of chartered accountant certificate indicating the export performance. However, in case of the rhodium, finished silver jewelry, entitlements will be 3% of FOB's value of export of such jewelry. These authorizations shall be non-transferable and subject to actual future conditions. So, however, in case of the rhodium, finished silver jewelry, entitlement will be 3% of FOB's values of export of such jewelry. These authorizations shall be non-transferable and subject to actual future conditions. Now, advanced authorization for precious metals. In case of the precious metal, advanced authorization shall be granted on pre-import basis with actual user conditions for duty-free import of gold of fitness not less than 0.995 and mounting sockets, frames and findings of 8 carat and above. Silver of fitness not less than 9.995 and mounting sockets, frames and finding containing more than 950% silver by weight. Platinum of fitness not less than 0.900 and mounting the sockets, frame and finding containing more than 50% platinum by weight. So what are the important points we have? Duty-free import authorization scheme shall not be available for gems and jewelry sector. Duty-free import authorization scheme shall not be applicable for gems and jewelry sector. Exporters may obtain gold, silver, platinum from nominated agency. Exporters in EOU and units in special economic zones would be governed by the respective provisions of Chapter 6 of FTP, Foreign Trade Policy and Special Economic Zones. SEZ stand for Special Economic Zones. So exporters in EOU, export-oriented units. EOU stand for export. So exporters in EOU and units in special economic zones would be governed by the respective provisions of Chapter 6 of FTP, SEZ rules respectively. Nominated agencies are MMTs Limited, the Handicraft and Handlooms Export Corporation of India Limited, the State Trading Corporation of India Limited, PEC Limited, STCL Limited, MSTC Limited, MMTC, and Diamond India Limited. We have 3-star, we have 4-star, we have 5-star export out depending on the given by the regional authorities. 4-star export house from gems and jewelry sectors and 5-star export house from any sectors may be recognized as a nominated agencies by the regional authority of the country. Reserve Bank of India can authorize any bank as a nominated agency. If suppose Central Bank of the country or Reserve Bank of India, in case of India, Reserve Bank of India, the central bank can authorize any bank as a nominated agencies. Procedure for import of precious metals by nominated agency other than those authorized by Reserve Bank of India and the gems and jewelry unit operating under EOU and SEZ scheme, and the monitoring mechanism thereof shall be as per the provisions laid down in the handbook of procedures. A bank authorized by the Reserve Bank of India is allowed export of gold scrap for refining and import standard gold bar as per the Reserve Bank of India guidelines. An exporter with annual export turnover of ₹5 crore for each of the last 3 years may export cut and polished diamond, each of 0.25 carat or above to any of the agencies laboratories mentioned under the paragraph 4.74 of Handbook of Procedures with re-import facility at the zero duty within the 3 months from the date of export. Such facilities of re-import at a zero duty shall be subject to the guidelines issued by the Central Bank Board of Custom and Excise, Department of Revenue. So any export with the annual exported turnover of ₹5 crore for each of the last 3 years, since last 3 years, may export, cut and polish the diamond, each of 0.25% carat or above, to any of the agencies laboratories mentioned under the paragraph 4.74 of Handbooks of Procedures with re-import facilities at zero duty within the 3 months from the date of the export. Clear? Within the 3 months you have to do. Such facilities of re-import at a zero duty will be subject to guidelines issued by Central Board of Customs and Excise, Department of Revenue. Export of jewelry through foreign post office, including via speed post, is allowed. The jewelry parcel shall not exceed 20 kg by weight. 20 kg is too much. Private and public bonded warehouse may be set up in SACE, DTA for import and re-export of cut and polish, diamond, cut and polish colored gemstones, uncut and unset precious and semi-precious stone, subject to the achievement of minimum valuation of 5% by the DTA units. Clear? Okay, so private and public bonded warehouse may be set up whether it's in special economic zones or domestic tariff area. DTA stand for domestic tariff area. For import and re-export of cut and polish, diamond, cut and polish colored gemstones, uncut and unset precious and semi-precious stones, subject to the achievement of minimum valuation of 5% of DTA units. Now, export promotion capital goods scheme, EPCC scheme, most important thing, EPCC scheme. EPCC scheme allows import of capital goods for pre-production and post-production at a zero custom duty. Alternatively, the authorization holder may also procure capital goods from indigenous sources. EPCC schemes shall include capital goods including a CKD and SKD conditions, computer software system, spare, mold, die, jigs, fixer, tools and refractories, or initial lining and spare refractories and catalyst for initial charges. Import of capital goods for project import notified by Central Board of Excise and Custom is also permitted under the EPCC scheme. Import under the EPCC scheme shall be subject to an export obligation equivalent to the 6 times of duties saved in capital goods to be fulfilled in 6 years, reckoned from the date of issue of authorization. Authorization shall be valid for import for 9 months from the date of issue. Revalidation of the EPCC scheme authorization shall not be permitted. And while talking about the second-hand capital goods shall not be permitted to the imported under the EPCC scheme. Yes, please do remember, second-hand capital goods shall not be permitted under the EPCC scheme. EPCC scheme cover manufacturer and exporters with or without supporting manufacturer, merchant exporter tied to supporting manufacturer and service provider. Not deemed exporter. Only 3-4 slides is being left. To provide a level playing field to domestic manufacturing in certain specified cases as may be decided to the government from time to time. So what is the objective of deemed exporter? To provide a level playing field to domestic manufacturers in certain specified cases as may be decided by the government from the time to time. Deemed exporters. Deemed export refers to those transactions in which goods supplied don't leave country and payment for such supplies is received either in Indian rupees or in free exchange, in free foreign exchange. Categories of supply. Supply of goods under the following categories A to D by manufacturer and the under category E to H by main subcontract shall be regarded as a deemed exported. Benefit for the deemed export. Deemed export shall be eligible for any of the following benefits in respect of manufacture and supply of goods qualifying as a deemed export. Advanced authorization for annual requirement, DFIA, deemed export drawbacks, refund of terminal excise duty if exemption is not applicable. So what are the benefit for the deemed export? Deemed export shall be eligible for any all of the following benefit in respect of the manufacture and supply of goods qualifying as a deemed. Advanced authorization for manual requirement, DFIA, deemed export drawback, refund of terminal excise duty if exemption is not applicable. Thank you once again. Thank you so much for joining. Take care.